Welcome to the Energy Experience powered by Ag Valley Co-op. I'm David Dodson, Vice President of Energy here at Ag Valley, bringing you expert analysis in the energy markets. A Ukrainian missile strike on Russia's largest Black Sea port, Novorossiysk, halted oil exports, removing about 2.2 million barrels per day, roughly 2% of global supply. And tightening markets. Russia is trying to mitigate the impact using spare refining capacity, but significant export delays persist. The IEA reports that Russian oil and fuel revenues are falling. JP Morgan also notes of a third of Russia's seaborne export potential is stalled in tankers. This has increased the WTI crude pricing volatility and reinforced market risk premiums. The port resumed loadings after a two-day hiatus, but traders remain wary as Ukraine continues targeting Russia oil infrastructure. Enbridge provided a $1.4 billion expansion of its mainline and Flanagan South pipelines to boost Canadian heavy crude deliveries to the U.S. The crude will be coming into the U.S. refiners along the Midwest and Gulf Coast regions. The added capacity aims to enhance supply security, ease WTI price pressures from global disruptions, and narrow the WTI-WCS differential, supporting more stable and cost-effective refining in the U.S. The move reflects a strategic focus on strengthening North American energy infrastructure amid ongoing geopolitical risks. U.S. producers are holding rig counts relatively steady here in the 410s since the start of July, and current oil rigs are running about 13% lower year over year, and that has been the new normal. Gas rigs were off a bit last week, but producers have brought consistent growth in gas-focused drilling activity as higher prices are rewarding producers who have previously faced a glut of gas from primary and associated sources. The focus has now shifted to meeting demand growth coming from the wave of LNG export capacity build-outs and increased power generation demand for data centers and other industrial applications. As of 9 a.m., WTI December crude is up 2 cents, trading at $60.11. Heating oil is down 0.5 cents, and New York Harbor RBOB gasoline is trading down 1/4 cent, while Conway propane is trading down 1 penny. Thank you for joining us for this week's Energy Experience powered by Ag Valley Co-op. I hope you found the information valuable. Stay tuned for our next update when we will continue to bring you the latest trends in the energy markets.